So, as EY-Parthenon America's commercial strategy leader, Susan Lee works with clients across industry sectors, from consumer packaged goods to retail to industrial sectors, to develop strategies that generate results, including pricing strategies. She brings more than 2 decades of experience to advising Fortune 500 firms to small businesses on integrating profitable pricing strategies into their sales and marketing plans. She's a bona fide revenue growth expert. We're so pleased to welcome Susan Lee, who will share best practices and pricing strategies that generate concrete, measurable results that all small businesses can benefit from, particularly in this really challenging inflationary environment. Thank you, Susan. Welcome.
Thank you for having me, Barbara.
I'm so happy to have you here. I'm so happy to dig in, and you have this sort of really tremendous bird's eye view of the business landscape from where you sit. As we said, you're overseeing clients that come from all different sectors. I would love to get your big picture um, snapshot of the key factors that
Hmm.
businesses face as they make pricing decisions in today's landscape.
Yeah, the key factors the companies are facing are quite tremendous. We're not talking about just cost increases. We're also talking about supply chain being a struggle for the last 2 years, but now it's easing. And now, at the point where consumers are struggling, we're sensing consumer sentiments um, really worried about the future. And so, for businesses, when they're making pricing decisions, unlike the past 2 years where they can just pass on the price, pass on the cost to consumers, they're seeing that consumers are switching. So they have to be a lot more surgical in terms of where to take price, where not to take price, because otherwise they're going to see consumers switching away from them and they might be losing share and losing volume.
I love that term, surgical pricing, and it's interesting because I'm gonna look at my cheat sheet as I always need to do. Uh, in terms of capturing the consumer's head space, I know that EY's CEO Outlook survey was interesting, was sort of picked up that consumers' demographics, changing demographics, were one of the biggest concerns and actually the biggest risks to their growth strategies, according to businesses. I'm curious what's important to say, and you already touched on it, about consumer trends and in terms of pricing, and how have consumer trends impacted consumers' pricing expectations?
Yeah, so for the last few years, EY Parthenon has been studying consumers very closely. So we conduct this ongoing consumer survey to understand the sentiments, to understand how consumers are feeling. What we are noticing is depending on the consumer segments and depending on the categories, consumers are switching their behaviors. So, for example, when you're thinking about different products, some of the products consumers buy are discretionary. So, clothing, consumer electronics, but some of the things we buy are not negotiable, such as we're still going to have to eat. So, food staples or basic necessities are very different, let's say, than comparable discretionary products. So when we're studying consumers and their purchase behaviors in the last few years, we're noticing that now, especially in the last few months, consumers are saying, we're going to buy less for the discretionary products. And for the most part, they're also seeing a very tight budget. And so as inflation goes up, they're saying, well, we're going to switch. We're going to switch brands. We're going to switch to store brands. We're going to switch to cheaper alternatives. And so for companies that are potentially selling discretionary products, they may not have so much room to increase the price because consumers are at the point where they are switching away.
So just to pull back a second, I'm curious about you know, back to the basics, the core tenets of a effective and not just effective, but profit generating pricing strategy in any market. Would love
Yeah.
to get your insider take on that.
Yeah, pricing is a funny discipline. Many companies think about pricing as I'm just gonna set the prices. So a bottle of water is $1 versus, $1.50. But in reality, pricing is a lot more complicated than that. As a discipline, we always recommend companies look at pricing all the way from what is your strategy? What are you trying to achieve? Are you trying to achieve higher margin? Are you trying to achieve higher market share? Who are you trying to go after? What kind of customer segments? And what product are you using? So, are you trying to capture the more premium market, or are you trying to go at more the value brand? So, just even before you start to think about the price point, you have to start with that strategic intent. Then we go into the pricing, setting the prices, actually thinking about the price level, and then all the way to if you're a B2B company, you use your salespeople to go after the implementation of pricing. How do you incentivize your price sales force? And are you actually helping them tell a value story? So is when we think about the tenet of pricing is really all the way from your strategic intent to how you're implementing your price realization at the end.
So intent and execution, right? Um,
Absolutely.
so in terms of a price, what's essential to say about a pricing strategy, core tenets of a pricing strategy in this inflationary environment?
Yeah, so the most important thing I would tell any company, large or small, is forget about average. If you are looking at the average number, it's meaningless. You have to look at your product segments and your customer segments carefully. Because once you get into the data, you will see that actually, depending on the category, depending on the product segments and your customer segments, they behave differently. And given the fact that consumers or customers have a lot of room to move around these days, you have to be surgical. You have to be able to find the segments that have more stickiness to your product or services. And you have to find the product that consumers or customers are willing to pay more, so that for certain areas you are taking price up, but then for certain other areas you're actually keeping price, or you might even need to provide more discount or promotions. But looking at average is likely going to lead to leaving money on the table.
So just so I understand, this is really important. Average meaning your average, taking the average of the customer base. You're saying don't do that. Be surgical and segment, right?
Yes.
That's the key in inflationary market. That's an important, very important distinction.
And I would say for even for smaller companies, because we talk to companies large and small. I think smaller companies tend to say we don't have the resources to do the analysis. We may not have the system to dig into running fancy regression models. What I would say is we have seen smaller companies even using Excel, even using some basic tool to start looking at the numbers. So it can be done. And there's the scrappy way of doing it, and there's certainly multi-million-dollar way of doing it.
And that's what, perfect segue to my next question. In terms of what are the meaningful metrics that businesses, small businesses in particular, should be using to measure the success of their pricing strategy, whether it's a product or a service?
Yeah, so one of the most basic KPIs is,
And the key
let's
performance
say,
indicators, right? Sorry to interrupt you. Yeah.
yes, um, let's say your intention is to raise your price by 5%, and that's how you have changed your list price. oftentimes companies don't actually measure what is the net price they achieve. What I mean by that is, especially for a lot of B2B company or even B2C company, your list price goes through a journey of discounting to the customers. So for supermarkets, they will have a lot of flyers and promotions. For B2B companies, their salespeople may be offering customers their rebates or on invoice discounts. What companies oftentimes don't know is they may set the price increase at 5%, but once they go through that journey of discounting, they might be achieving only a 1% of price increases. And so even just the simple measure of what are we getting the net realized price is a critical piece. Now, the other one is, especially for B2B companies where salespeople make a lot of pricing decisions in the field, we always encourage companies to actually look at the price achievement by salespeople. So you can actually see which salesperson is actually doing a better job at price negotiation versus which other salespeople may need more coaching and training. And so that's another, not that complicated to do, but certainly a way to get to the bottom of price execution by looking at per salesperson their price achievement.
So per salesperson for B2B, and then the other metric, just to sum up real quick, because I want to get into some of the details, was what? The other, just to repeat that, you have that other wonderful one metric.
Is the net selling price.
The net selling price. Perfect.
Not only the list price, but the net
selling price. So let's just dig into some solutions. I'm curious, once again, from you have this wonderful perspective. What are effective pricing strategies and tools that you're seeing that are actually generating results that small businesses can leverage in today's market?
Yeah, so there's the immediate shorter term tactics, and then there's the longer term tactics. And I'm gonna not stick with all pricing because pricing ties with your assortment, your portfolio, and also your services. From a short-term standpoint, we're seeing the starting point a lot of companies are doing is look at their portfolio of product and services and understand what are the products that can actually command higher premium. They may want to move away from the commoditized products that they're really not being able to get any margin at all. So even before they think about pricing, really understanding which are the product segments that they have the right to win and charge a higher margin, and start to adjust their product assortment. That's the starting point. And then also, as you're adjusting your product assortment, think about the supply chain implications, because you may want to actually sell a lot of products that you don't know if you're going to get the supply, especially with the holiday season coming up. You don't want to be going to your customer with an empty shelf. So taking into account the supply chain risk as you are planning your upcoming offering is critical. Then it goes to setting the pricing and setting the promotion. It goes back to avoid the average. Think about where are the places that you can actually charge a premium. Where are the places that ties better with the consumer trends, for example. And we know from our study that in the last few years, consumers actually have paid a lot more attention to health and wellness related product and services. And so those are the categories where consumers are likely going to value more versus categories that may not tie to the overall trend. Now, the other piece that we're seeing from the consumer study is sustainability is a very critical value driver for consumers. And so selling those products And for those offerings that consumers actually care more about, um, are places where you don't need to discount as much.
Excellent. So understanding the market, understanding where consumers are valuing and what they're valuing in the market now, it's sustainability, health and wellness. Understanding where you particularly have the cachet, or for lack of a better term, to charge more, and also understanding the supply chain constraints and operating within that. So really data. Anything you want to say about technology that's accessible to small businesses in terms of pricing, and what anything that small businesses can leverage in terms of tech as a helper.
Yeah, so there are a lot of pricing solutions that are out there. They tend to be pretty complicated pricing solutions that takes 18 to 24 months to implement. However, for small businesses where they do have the data, from an analytics standpoint, as I mentioned, you can use simple Excel, or there are a lot of data visualization tools such as Power BI or Tableau, where you can actually start to visualize and understand your pricing and price volume relationship in your business. And that doesn't require a massive software implementation. It's more data visualization. Again, this is a place where I know it can be scary for small businesses that may not have spent so much time in the data. Um, but I've seen certainly a small investment in this area can help small businesses be a lot more surgical in their pricing decisions.
One holiday tip: we're leading into the biggest shopping season of the year, where businesses generate disproportionate number amount of their sales. Many businesses. Any one thing that small businesses can or should know or lean into this holiday season in terms of pricing?
The most important thing is understanding the consumer trends. Consumers are saying they will buy less in terms of products, but spend more in terms of experiences. So for small businesses, if there are opportunities to tie in their offering with services, that enables them to get a more premium and potentially get more value from their consumers. Because just knowing that their consumers' budget is limited in this holiday season, especially for the low to medium income consumers, then you do want to understand what are the other areas that they might be willing to spend more and add those to your offering.
Perfect. Adding service, the service element, value add, knowing the trends into the holiday season, understanding what consumers are valuing. This was so incredible and helpful and wonderful, Susan. Thank you so much. I could keep talking to you, but we're out of
I
time.
love this conversation, Barbara.
Me
I hope
too.
we'll chat some more, and next time we'll do this in person.
I would love that. Thank you, Susan.
Thank you.